All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Interesting market setup here this morning. We had the Fed yesterday, and basically the market's set to open up today where it was sitting ahead of the Fed yesterday. So not a lot of net movement. But last night we saw S&P futures climb about 10 points here during the Asian session. And then we started to get data. We started to get the PMI data. And, this is a look at February data, right? So, we see retail sales for December. Great. Yawn, snooze. That's old data. GDP, old data. But we're getting some February data. And yes, the data will be revised. But, the first glimpse here into February. And as those data reports started coming out from Japan and from Germany and from France and from the Eurozone region, we have seen S&P futures weaken overnight to the point where they're down about 5 points here this morning. So nothing, too substantial, but a definite kind of backward weakness here. With fair value, we're only looking at about a 3-point open lower in the market, and small caps are set to open flat. So, we're not talking about a big gap, big movement, but the driver for futures to weaken here is something that is very noteworthy. And let's go take a quick look here at it. And this PMI data. Me, the manufacturing PMI data, it's, for me, one of the most important pieces of data out there because of what it means for earnings overall. Here we had it in Japan last night, and it came in at 48.5. Prior level was 50. Prior revised was up to 50.3, but this time 48.5. What does this mean, 48.5? Well, this is a survey, and this is a survey that, that has a midpoint of 50, and above 50 is expansion, below 50 is contraction. And we've talked about how the bears, their argument out here in the market is there's economic slowing. But there's not economic contraction. The expansion is still going on. It's just at a slower pace. Signs of contraction could equal serious trouble. Well, this is a contraction number, 48.5. This is a contraction number here, and it's the first time it shows contraction since the middle of 2016, somewhere around there. New orders drop, big fall in output, and so definitely a ouch type of number. And okay, great, fine. It's one piece of data, right? Let's go take a look at Germany. Germany here, their composite flash number. And here you can see the composite level, 52.7. That beat the consensus. Better than last month. So pretty good number, right? Pretty good number. But you break the number down and you look at manufacturing, a bigger than expected contraction. This number's being led by services, right? Now, some economists will argue, and I think it's a very valid argument, that the global economy is less manufacturing than what it used to be and more services than it ever has been, right? And we have seen that kind of morph and transition over the last 20 years, right? But we are seeing contraction in the manufacturing, but a really strong number here in services. In fact, this is the first time we've seen manufacturing contract since April of 2013. So it's it's one of those here. He says, moreover, new orders, stocks of purchases, and supplier delivery time components all pointed to worse to come. And every month when we look at the ISM data, we look at new orders because that does point to what's more likely in the future. And from a manufacturing standpoint, definitely weak. But from a services standpoint, some real positives. So a mixed number. A mixed number at in terms of in terms of how the market's going to look at it. PMI composite flash for Germany, the composite level shows contraction. Now the prior number was contraction. It was expected to contract. It is contracting, but a little bit better than expected. This is one where France is showing a better manufacturing level and a worse services level. So it's a mixed bag, to say the least out there. It's not exactly a huge bullish, endorsement, but it's also not, a big bad. Excuse me, my apologies. It's also not a big bad, kind of bearish, type of thing. And then we look at the eurozone as a whole. The composite level 51.4, so expansion, and better than last month, right? So expansion and improvement in expansion. Manufacturing, though, and this caused by Germany, worse than expected. Services much better than expected. So we see that here. Within manufacturing, output hit a 69-month low, contracting for the first time since June 2013. New orders saw another sizable decline. So when it comes to the manufacturing, the bears are going to have a little argument, but that is offset, fairly decently by the bulls looking at the services number when it comes to the European data. Market opens here today. We did have durable goods orders that came in this morning. Here in the U.S. This is not a number that I find to be all that relevant. Some call it the Boeing number, but you can see how choppy it is. It is just so choppy, month to month, up and down and all around, and just doesn't really say a whole lot, for things with it. It's just, aircraft skews it so much that, it's just not one I think is relevant, but capital core goods down month over month. Okay, a little worse than expected, but new orders just slightly better than expected. But that could be changed, with just a couple airplane orders. So it does create some, not exactly the most relevant piece of data, I should say. We will have the oil inventory data here today, instead of yesterday, but, shortened trading week. So it does come out on Thursday. And then, as far as the data goes, again, my apologies. I woke up with the sniffles here this morning, so my apologies again. But as far as data goes, that's this is the most important data that we have seen here, for the last couple weeks, and the most important data that we will see until the beginning of the new month here in March, which is still more than a week away. So, a piece of data that. Yes, are there some bearish implications? Sure. Is it all grisly? No. Is there a little bullish silver lining in services? Yeah. Right. Now, again, we'll see what the U.S. is, but, in terms of overall market action, yesterday we talked about, these Fed events, they can be pivot points, for the market. They have proven to be upside and downside pivot points many times. It's not an immediate thing. It's not something where you go, ooh, that moment the Fed comes out, boom, there's the pivot. It could take some time to develop. I do think this kind of 27.75, this kind of reaction low from the Fed yesterday is quite an important level to hold. And if that level breaks, we could see the sellers kind of flood into the market fairly quickly. Now, one area we are seeing some early selling on here this morning, and it's been a white hot area in the market, is gold. And we saw gold, pretty much sell off ahead of the Fed yesterday. Stay pretty stable, with the Fed, and then overnight, creates or a little bit of weakness, coming in back into gold here. But we are seeing that weaken here just a little bit. And ironically here with the U.S. dollar trading slightly lower here this morning is where we're seeing that weakness. So, will that weigh on the materials sector a little bit here this morning? Yeah, it might. Okay, it certainly might. Now, there's a stock out there, Tesla. You might have heard of it. Tesla here. Very interesting company. It was one that I looked at yesterday, and I thought about jumping into, not for the challenge. The options are just too much. But personally, I got some bear signals on it, and, I was looking, okay, do I trade this down to 290? Possibly even the 270 area from a technical standpoint. We could make a pretty good argument for 270. So I was looking at it, and I was talking with my brother. We talk about different trades a lot, and he asked me, "Well, are you going to do it?" And I said, "No." I said, "This thing smells like something that has a perfect setup, but is just going to get upgraded in the morning." And I made that just kind of based on some of the action that we saw around the close here in it. There were some minutes where we just saw these kind of sharper spikes, like, man, something's up. And sure enough, this morning the stock gets an upgrade, $445 price target put on it. Now, I don't find that very interesting. What I do find interesting is that it has that, and yet the stock is set to open up lower. It was upgraded, price target 445, and the stock is set to open up lower. That tends to mean or tends to show or signify that there's going to be a little bit of drop here. A little bit of drop here in the stock. Now, it's not, kind of your overall traditional upgrade. It was a bullish analyst kind of reiterating their bullish call, but it's not pushing the stock higher here this morning. And when we see companies getting upgraded or having bullish analyst calls and the stock not going higher, it tends to be path of least resistance lower. And with some of the bearish signals that came into it yesterday, I would not be surprised to see some of that come into play, here today, and see some further sharp decline in the stock. Either way, about that 306 level sets up as a nice little stopping point, here for it. Okay, we are seeing a lot of stocks set to gap up this morning, from Micron to U.S. Steel to AMD to Alcoa. We're seeing a lot of stocks set for little gaps up, even though the market's set to open up red. So there's definitely differentiation here in the market this morning. This is not one of those, market's going to gap down and everything's going to be red and everything's going to sell off. That's not what we're seeing initially. And, so if things start to break, I will look to jump in aggressively. But if the bulls continue to hold, the majority of the control, I'll, continue to wait it out here a little bit. And, as I've discussed for the challenge, I think the much stronger reward potential is to the downside, but I need the confirmation. And so far, there's nothing confirming, for the most part out there on the downside here. Just yet. But, today could change, maybe tomorrow, maybe next week. But, I will wait for that, that sign of change to step in there. Thanks for hopping on. Have yourself a fantastic day, and we'll talk to you later. Take care.